All right, Roundtable, it is Trading Thursdays. We're going to follow up on a couple of trades that we looked at in this week's coaching session, and then we're going to talk about some new symbols that I've been tracking and actively looking for positions. We talked about the Aussie US dollar. This is the hourly chart right here, and you can see this week, here's the Sunday break right here. This week has been a rocket ship ride, so to speak, with the Aussie coming off the 200 handle all the way up to 425. So we've had a 200 pip move in this week, breaking out over highs, dogs and cats living together. Anyway, sorry, an obscure movie reference there. Let's go up to the daily bar and reacquaint ourselves with some of the things that we talked about in Wednesday's coaching session. We looked at a bunch of resistance in the past in the 2 to 400 handle. 2 to 400 resistance zone. And prices really pushing up through there. Wide range bars closing near the high every single day for the last 3 days. This whole mess started with me looking for a short position here a couple of days ago. So let's go back to the hourly bar. We'll talk about why that short trade never happened, and then also how to use some analysis to avoid taking really bad trades. All right, so here is the hourly resistance coming into the 320 level nearly exactly on each one of the highs. Now, one of the things in the Insider Code course is this idea of confirmation. Confirmation, remember, comes from how the market actually works, how the activity in the market actually works, and then adding a layer of waiting for the professional money to actually confirm that they're in the market. In other words, we wait for price to break above resistance and then come back down and then retest it back to the upside. All right, so let's go ahead and zoom way in. Let me turn off my drawing tools here. Whoops, there we go. All right, so the market made the first trip up here. And that's about 9 o'clock in the evening time. Remember, the Australian dollar is an Asian session pair as well as a London session pair. The Australian economy trades a lot in China. In fact, they're one of the main contributors to China. However, they also export to the world. Lots of basic commodities, beef, gold, copper, smelting materials, lots of stuff, materials for producing steel. So you could trade this in the Asian session, but we're going to go ahead and skip that for now. So coming into, here's 11, here's 1 a.m., 2, 3, 4, 5, 6. So all the way through the London session, price is really not trading up into resistance. Remember, resistance was this 320 level up here. We also have the prior resistance here. Also, to take note, that price is coming nowhere near this prior high. In other words, it is making, if I back up the chart to show you, if we were looking at this trading as if it were really happening, let me back up. So as we see these hourly bars tick across one at a time, you can see price is going nowhere near this prior high. It's certainly nowhere near this prior low. There is no momentum in this market at the moment. What that tells me as a day trader is there's no trade. Look, one of the common mistakes that people make with the Insider Code course in particular, but with trading in general, is, and this happens in the retail marketplace mostly, not so much in the professional world because they like beat it out of you. Retail traders are one-trick ponies. They're always looking for one tool, one indicator, a red light, a green light, something so simple that it only requires one thing in order to trade. And the market just isn't like that. So looking at what the market is doing, right? It came into resistance here, into resistance here. We have support back here. Price is just nowhere around either one of them with momentum. What we like to see is that the market has momentum when it comes up to resistance, comes back down, and then retests that resistance level, preferably a little bit above. Okay, so it's not doing any of that during the London session. I'll just kind of fast forward through it. Whoops, a little bit too far. So here was the first test. Now, this is a wide range bar, and in the insider code trading course, whenever we see a bar like this is 9 o'clock in the morning. It is at the appropriate time, but remember, wide range bars are a warning sign. A warning sign of what? A warning sign that if you jump in front of that freight train, you're going to run into trouble. This is where confirmation comes in, and this is where a lot of traders go wrong. They simply don't want to do the work. I can't sugarcoat it. I can't say it any differently. You've got to be willing to do the work, understand some of the concepts, and get away from this kind of naive rookie trader thinking that you're going to have some tool, you can slap it on your chart, and it's going to tell you everything that you need to know. You just need to understand what tools to use when, and it is a very simple process, but it's not as simple process as like red light, green light. Those systems always break down. So we have momentum. It is a wide range bar, so we do need to wait. Now, next bar comes in. We can see now, all right, momentum is simply continuing. What I said last week with the Aussie dollar was, hey, if momentum continues, we need to flip around and look for a buy. This is everything in the course. That means we need to see a retest of prior resistance, and we simply don't get it. We're down at 10 o'clock, 11, 12. Look, this thing is just off to the races, so there wasn't a trade. What we need to do at this point is simply sit back and wait for another setup. Now, let me go ahead and fast forward. There was no really good entry anywhere in here until we get right here. But again, this is during the Asian session. So we got a compression in the Asian session right around 2 a.m. You can see, let me zoom in again. Come on now. There we go. Right around 2 a.m., which is this bar here, you can see the compression held for the London session. As the market broke out during this hourly bar, that's where we have some kind of opportunity on the break. Aggressive traders, of course, could simply trade above this prior high, which would have got you in at 397. Conservative traders would have to drill down to the 15-minute bar to see if you had an entry there, or wait for the retest, which was on this bar here, came at 4 a.m. Eastern Time at about 396. Again, at 5 on the 5 a.m. bar, the low came in at 398. So lots of opportunities to get in, but and this is what drives rookie retail traders, whatever you want to call them, new traders. This is what drives them nuts. Is you're not trading through here, and you know what? That's okay. Right, if you can go through life trying to catch this kind of trading, and you can do it, but you're going to wind up getting stopped out more often. Yes, they are going to be smaller stops, but more stops is not a good thing. It takes a toll psychologically. I would rather wait for all of this garbage to settle out, have the market break out twice. Look at this. Breaks out here, breaks out from this mess there. Obviously, the buyers are in the market. I can take my trade over here. Much less stress. The market moves away from these prices very, very quickly. I can put on a bigger size, take my profit based on the daily bars. We'll go ahead and get to the punchline here. Take my profit once the market starts to get back into resistance levels. Let's go ahead and zoom in. Come on. Pause. There we go. Which is going to come in anywhere up in this area, like right in here. So very close to jumping off the bus here on the Australian dollar if you happen to get in on it. All right, so I want to run through now very, very quickly some more trades that I'm looking for. Aussie yen has been on my radar. I talked about this a few days ago. I am looking for long trades over here. Prior resistance here about 81.80 and then a little higher at 82. I think we still have some room here to move, but it is getting tight. We're getting close to getting sandwiched between the sellers at 81.80 and the sellers at 82. So be careful there. Now on to other stuff. Gold. I am looking to buy gold. Hopefully those of you that have been with me for a while recognize major compression pattern here. Major meaning it's over many, many months. I don't know which way this is going to go. I am leaning towards the long side over here. I'm still watching for the S&P 500. This applies to all stocks, meaning we have resistance over here. I am looking for this resistance to hold, so I am stalking short trades, but I am looking for short-term buy trades, long trades, excuse me. Crude oil, I am a buyer in this market. I love this pattern. Broke out of this consolidation down here. We've been talking about buying crude. There's the retest there. Now we are off to the races. Plus we've got lots of news for whatever that is worth, fueling sort of the buying desire over there as well. On the stock side, I am looking to trade Apple again from the short side. I know I've been mucking around with this thing from the short side for a while. We've got the gap plus resistance, I think, holding in. Whoops, sorry. Let me move that actually into the window so you can see what the heck I'm talking about. We've got resistance pointing from the prior highs and the gap, but again, getting sandwiched in this area up here where we've got potential sellers that can come into the market. Amazon, another stock I've been tracking for a long time. You can see the trading lanes here, buying here, selling there, just kind of ping-ponging back and forth on Amazon. I am a buyer down in the region here. Whoops, shoot, I moved it. No. I am a buyer down around 214, 216, 226, not so much. I am looking to sell this bad boy at this point right around 240. This is moving up about $1 a day, so if you get this outside of Thursday, you can just kind of count on that line moving up about $1 a day. Here, if you can't trade the oil contracts, here's the USO gaps. This thing is off to the races as well. But again, you need to make sure you understand the USO before you just jump in trading it. Let me see, what else do I have on my list? Shorting the treasuries. There's the TLT again. TLT, this is an ETF. If you can't trade or don't want to trade the futures contracts, you can see this is off of the prior highs. This is what I'm really hoping we get in the treasury market. We did get it in the TLT. Beautiful setup, gap up, trading down. Now I'm waiting for the retest again. I see that sellers are involved. I'm waiting now for those sellers to retest the prior highs, which is what they usually do. Going over to the future side, on the 10-year, you can see, boom, not really a gap that I wanted, but definitely pushing up to the highs. There was, let me zoom in. Sorry, come on, zoom, darn you. All right, there is the move up. First, closes down on the day. Sellers are present. Move up, closes off of the highs on the day. That's the confirmation that we're looking for. At this point, trading below right about there. Let me give you a price. Oh my goodness, trying to go too fast. So breaks below about 134.12 is really going to put this into a nice position. At this point, if you're not in, I would wait for a break below 134.12 and then a retest of that level.